Hi, welcome to the first lesson of Financial Market Starter. My name is Alex Chia, and today we're going to talk about the differences between trading and investing. You must know that in the market, there are three groups of people. They are the traders, the investors, and the clueless. The traders are people who have a shorter view of the market. They want to make money fast, take the profit, and get out. The investors are people who have a longer view of the market. They want to grow their net worth in the long run. They buy assets and build portfolio. The clueless are the worst because they are the people who have no idea what they are doing. They follow what other people tells them. They buy any old how and usually end up losing money. The clueless are the one who get slaughtered in the market, and you do not want to be the clueless. But how do you know you are not a clueless? Well, this is simple. Just answer these questions. Number 1, do you know why you buy a stock? Number 2, do you know when to sell the stock? Number 3, do you know how much you are risking for that stock? If your answer is no to any of these questions, then congratulations, you are the clueless. A trader and an investor will know why they buy, when to sell, and how much they are risking. You do not want to be a clueless. You want to become a trader or an investor as fast as possible. And the first step is to understand the differences between trading and investing. And here are the differences. Number 1 is objective. Trading's objective is to generate profit fast, while investing's objective is to grow wealth in the long term. With this understanding, you can tell that trading has a short-term goal, while investing has a long-term goal. Because of this, trading can be part of investing and not the other way around. Number 2 is intention. A trader buys with an intention to sell later or vice versa. This means that he can also sell now and buy back later. While an investor buys with an intention to hold forever. This is not to say that an investor will not sell his stock. This only meant that he has no problem holding his stocks for a long time. Number 3 is important factor. To a trader, volume and volatility is the most important factor, while to an investor, value is the most important factor. In order for a trader to make money, he needs to trade a counter that has high volume and volatility, which means there are many people buying and selling that counter, so that he can easily enter and exit a trade. If a counter has no volume or no volatility, it doesn't matter how valuable the counter is, a trader will not be interested. On the other hand, in order for an investor to grow his wealth, the counter he owns must have value, which means they must produce excess monetary return. The excess monetary return can be in the form of cash or assets with store of value like gold, oil, or properties. If a counter has no value, it does not matter how much volume or volatility that counter has, an investor will not be interested. Number 4 is holding duration. There are 3 holding durations: short-term, mid-term, and long-term. Short-term duration and mid-term durations are associated with trading, while long-term duration is associated with investing. A short and mid-term holding duration can last from minutes to days to weeks to months, while a long-term holding duration can last from months to years and sometimes forever. Number 5 is analysis. In trading, a trader focuses more on technical analysis, while in investing, an investor focuses more on fundamental analysis. Technical analysis is the study of price movement. So, a trader is more interested in reading the price chart and predicting the future price movement of the stock. Fundamental analysis is the study of the company's health and financial numbers. So, an investor is more interested in reading the financial reports and predicting the future value of the company. Next, let's look at the products that traders trade and investors invest in. We already stated earlier that volume and volatility is the most important factor to a trader. Therefore, they will trade high volume and high volatility products like high volume stocks, futures contracts, and forex. While to the investors, value is the most important factor, so they will buy value generating products like value stocks, REITs, and ETFs. Number 7, let us talk about strategies. There are many strategies out there, but we are only covering some here. In trading, we have trend trading, breakout trading, pattern trading, and zone trading. While in investing, we have value investing, growth investing, dividend investing, and contrarian investing. Each strategy has its own pros and cons, and is suitable for selected products. For example, zone trading is more suitable for forex, and growth investing is usually used for penny stocks. We will cover each and every strategies in the future course, but for now, you just need to know that there are different strategies for trading and investing. Number 8 is famous people. The most famous trader today is George Soros. He became famous for shorting the Great British Pounds in the 90s. His current net worth is $8.6 billion. While the most famous investor in the world today is none other than Warren Buffett. Warren Buffett is famous for buying Coca-Cola in the 80s. His current net worth is $125 billion. If you ask me, is it better to be a trader or an investor? I think it's better to be both. So now you know the differences between trading and investing. What is the advantage of knowing them? Number 1, you will know who you are talking to. Based on what a person said, you will know that if he's a trader, an investor, or a clueless. For example, if he said he invests into value stocks, you know that he is an investor. If he said he trades currencies, you know that he is a trader. But if he said he invests into currency, you know that he is a clueless. Number 2, you are not easily lied to. In the financial market, there are people with hidden agendas. These people aim to mislead you so that they can profit from your losses. For example, someone may ask you to buy a worthless penny stocks after it has risen to new high, telling you that the price will go even higher. You know this is a lie because a trader will not buy at the highest point and an investor will not invest in worthless penny stocks. Number 3 is that you can make better decisions. Once you have a clear mind, you will not be confused by the media and the people around you. And when you have a clear goal, you can move towards that goal without having going in circles. Your path will be straight and you can reach your destination faster. So the next question here is, who do you want to be? Do you want to be a trader, an investor, or both? This is the first step you must take, and no matter which path you choose, you will at least know where to go. If you want to learn how to trade properly, then you may want to check out our Alpha Futures Trader course. In the futures market, you can trade indices, precious metals, energy, agriculture, currencies, US Treasuries, and cryptocurrencies. So, if this is what you are interested in, just click on the button below to join us now.